welcome to This Week, Next Week, a podcast from WPP's Group M. I'm Kate Scott-Dawkins,
And I'm Jeff Foster.
and we've got some fun stuff to talk about this week. Mainly Netflix. We're going to start on Netflix. We're recording this on Friday, so their earnings were just last night. Lots to pull apart from that, except no more subscriber numbers, which I'm sure we'll get into. And then a quick, run around the rest of the week. A couple of big antitrust trials happening or news on those regards in the U.S. And a couple of other earnings as well. Should we dig in? Sound good?
Yeah, let's do it. So yeah, I ended up listening into the Netflix earnings call last night, or last evening, and it was pretty interesting. I mean, the broad strokes were things are humming along at Netflix. They reported a 13% revenue growth, which would be 16% on constant currency basis. So that's about $10.5 billion in revenue. Of course, as we knew, they were not going to be reporting subscriber numbers. So our last tally was a little over $300 million from their last earning, 300 million subscribers, excuse me, from their last earnings. So we do have that sort of as a basis to model off of. But overall, pretty solid earnings. I mean, there's a lot to be excited about. Obviously, Netflix was in the news a little bit earlier. It leaked out about their plans to become a $1 trillion company and their path to a $9 billion in ad revenue.
Yeah, we're gonna dig into that in detail a little bit after we go through the broad strokes, certainly of what they reported on, and then we actually have some math from our modeling efforts that we can look at. How might they actually get there? What would have to be true in order for that $9 billion in revenue to happen in 2030?
Yeah, it was pretty interesting on the call. Management addressed that, that this was not a forecast, that this was a leaked number off of, goals that they had set. So they said that they usually don't address rumors or leaks, but because it was such a big story, they felt the need to address that one. So I thought that was a little interesting too.
Yeah, I had tips the Wall Street Journal for that one.
Yeah, exactly. That very good scoop. But I would say overall, very solid earnings. The one thing that might be a slight little bump in the road was U.S. Canada revenue grew 9% year over year, which was down from 15% in the previous quarter. But Netflix attributed the slowdown primarily to the timing of price changes since they recently raised prices. And then they did think that growth will reaccelerate in Q2 once all the price increases are realized.
Yeah. And they have, Q1 can tend to be a slower quarter if you don't have a big event like Super Bowl or Winter Olympics, at least in terms of entertainment content as well, right? Outside of a sports calendar.
Right. Yeah. Q1's always a little bit trickier as far as the big events go, right outside of a sports schedule.
Maybe that's why they're looking at picking up that Oscars
Yeah.
option for
Yeah,
for the next few
that
years,
would
right?
give them a nice live event. And it was interesting. They did reiterate, without going into too much detail, that nothing has changed on their live events and sports strategies. So it sounds like we'll probably hear more about that in the upcoming months as, these rights negotiations become more and more public.
Yeah, they were very quick to talk about the fact that it wasn't just sports, but it was any sort
Right.
of live event that was part of their strategy.
Yeah, correct. And it was also very interesting that they did acknowledge the value of video podcasts, just saying how the lines are beginning to blur a little bit more. So, we keep on hearing that over the last, bunch of quarters now, but just seeing the importance of video podcasts and podcasts, it's relatively inexpensive content. It fills a lot of hours and makes headlines, especially over the election cycle. So I think, this is just an area I think we're just going to see a lot more growth in.
Yeah, they mentioned especially talk shows, right? The blurring between talk shows and podcasts, or
Right.
talk radio and talk video, right? All starting to
Right.
blur together. They're in the enviable position of sitting currently in video budgets, which tend to be bigger, and trying to pick up additional money, maybe from audio or other places, which is, I think, a stark contrast to the challenge that Spotify faces, which, they're actually not quite, but probably like nearly double Netflix's advertising revenue today, um, but I think often gets slotted into that audio budget. So share of
Hmm.
that, it's a much smaller global pool of advertising revenue
Right.
than total video revenue, right? So it's a bit, I think, harder for them in terms of breaking out of that into a video um, budget allocation from marketers than it
Right.
is working the other way around.
Yeah, yeah. I mean, it's going to be very interesting to see how this strategy evolves. I mean, obviously, video podcasts are getting more and more relevant by the day, but there's only at this moment there's only a handful of creators that probably command like a traditional talk show audience size, equivalent of like a legacy media, especially like on a global platform. So they're out there, they're just few and far between. And, with the prices they command, it starts getting pricey at that point.
They just haven't discovered us yet,
That
Jeff.
that's true.
We could be the next, $1 million podcast enterprise.
Exactly.
Send in your votes now. What? All right. So let's continue. We don't have a Netflix deal yet, so we will continue with our analysis work. What else? I mean, they did touch. I think the first questions they handled from the analyst community were around tariffs and
Yeah.
economic assumptions and what's going to happen. How insulated are they from some of these market issues, both in the U.S. and internationally?
Yeah, I mean, management seemed pretty unfazed by it. I mean, they acknowledged it that there was going to be some, challenges on the macro front, but they said that, all their data and their pattern, their what they're seeing from consumer behavior hasn't indicated anything negative yet. So they reaffirmed their guidance for the year, and they basically, to paraphrase it, they kind of shrugged it off. They acknowledged it and didn't think it was going to be that big of an issue.
Yeah, they talk about home entertainment being, more resilient in a recessionary environment, right? Yeah, if you think about we've already been on this journey of transitioning from more of the entertainment revenue coming from maybe out of home sources like cinema into home entertainment post pandemic. We haven't seen all of those audiences go back to theaters, which I think we're already in this position where more people are watching more entertainment at home, and therefore maybe that budget in a consumer's wallet is still more protected than what it would have been sort of pre-pandemic before those habits changed.
Yeah, that seems to be the case. And, Netflix is probably in the enviable position of sort of, being the market leader, the first mover, and is viewed by most consumers as having, being a must have for entertainment, especially, based on the value. So I think they would be in a pretty good position. I might be a little bit more concerned about the third, fourth stream, level for on the streamers, but I think once consumers, depending on how the economy plays out, look at where their dollars are going, I think Netflix is in a pretty good position, especially when you look at some of their upcoming slate for this year.
Yeah, well, let's talk about that because there were also endless questions around margin. Margin was really strong in the first quarter and expectations for the second quarter. When they're off the back of that, not changing their expectations of margin for the full year, the questions were, okay, what's going to happen? Why, what are the costs coming into the back half of the year that are going to, get us to that sort of full year margin number? And there they really spoke about the timing of costs. So they're still planning on, I think what I took out of that was spending the same amount on content.
Right.
Those were just going to hit later in the
Just like,
year.
yeah.
So we shouldn't expect any sort of downgrade or decrease in what they're investing into content in the business.
Yeah, that was my take on that too.
And they're going to be paying for a couple of football games in
Right.
Q4. We have actually you did some looking at what the revenue was for last year's games, right? NFL
Yeah, it
games.
was just interesting just to pull it up just to give us a good data point. So, according to data from Guideline from SMI, Netflix brought in about $152 million for their Christmas games that aired in this past December.
Yeah. So we're looking at that again. I mean, that's going to feed into our assumptions for where advertising revenue goes from here, right? So maybe we jump into that.
Yeah, definitely.
So the note that was leaked, right? Their ideal was to get to sort of a $1 trillion market cap and then $9 billion in ad revenue by 2030. So I thought we could walk through some of the assumptions, right? What would have to be true to get there? At least one version. There will be multiple routes to this as a possibility, sure, but we're looking at one. So I think the first thing to note is that Netflix is starting from a relatively small base when it comes to advertising revenue, right? Again, I think our assumptions are for around 1 billion in 2024. Now, again, they don't disclose this, which is unsurprising. It's still not a quote unquote significant portion of their revenue, right? There are certain sort of assumed um, standards when it comes to, say, revenue starts hitting above 10 or a segment is more than 10% of your revenue. Typically you're probably going to report on that segment at that time. So they're starting from a relatively small base, and then total revenue of $40 billion in 2024, nearly right 39, which is certainly less than their more diversified peers of a Disney, which was 92 billion, Comcast was 123, but pretty similar to the more pure play media companies. Paramount did 29 billion in 2024. Warner Brothers also did 39 billion. But interestingly, for them, advertising obviously is a much higher share, right? So they did $8 billion in advertising out of a total of 39 billion. Netflix was much, much smaller at about 1 billion, right, as a percentage of ad revenue. Let's start with an assumption, just for fun, that Netflix doubles ad
Mhm.
revenue in
And
2025.
they actually did mention that on their call that they said they do anticipate doubling their ad revenue in this year.
Yeah, again, possible partially because it's off of a small base. They're still expanding geographies, so that opens up areas. They're going to add more sports, which tend to be high ticket items. So we think that's roughly reasonable, right? We can assume that they've confirmed it on their call. So we start going by 1 billion to 2 billion in 2025, and then we can use some consensus revenue estimates, which would put advertising roughly at about 4.5% of total revenue for this year, 2025. Still not significant, but certainly growing. Then let's assume growth starts to decelerate. So around 50% in 2026, because doubling year over year continually, once you get up into those higher numbers, is going to be a little bit difficult, right?
Yeah, that gets a little bit challenging.
Yeah. So let's say we have that. We're growing 50% then in 2026. That would put us at about $3 billion in ad revenue, 6.25% of total revenue. So that's growing at a pretty good clip. Then 40% growth the year after that. 8% of revenue gives you $4.3 billion in 2027. And then a kind of consistent ramp up of advertising as a share of revenue and a consistent deceleration of growth, which for modeling terms, that seems to make a lot of sense, does actually get you to $9 billion by 2030. So you can see how this math gets you to that sort of goal. Now that's approaching or just passing where, again, someone like Warner Brothers Discovery is today already in terms of advertising, but they didn't start there. Their base is off subscription revenue. So this is certainly building that new muscle for them. It does assume top line revenue growth also continues at a pretty fast clip. So around 10% in 26 and 27, and then still high single digits in 2028 through 2030. So that's, again, something you have to say for this to work. That top line revenue growth probably needs to remain pretty robust. A lot has to go right for them to reach that, which is why I think they referred to it as aspirational in the call, but you can definitely see a path.
Yeah, there's a lot of ifs there, but it is possible. And I think when you look at the paths to get there, I think live events and sports will obviously play a key role in accelerating that growth. And the question is, trying to find those live events and sports on a global level too. There's just not that many of them. Obviously, you have big, well, like the World Cup, the Olympics, but there's just not that many global sporting events. So, you're going to have to see what their strategy evolves if they kind of go for some of the bigger, regional players, such as like an NFL or cricket or something in that world. or if they kind of, look at smaller events that are prestigious, like the Wimbledons and the French Opens, although all those rights are locked up for a long time as well. So it's going to be interesting to see where they get that from. The NFL still seems like the obvious choice, and they are testing out international packages. And just for another fun little data point, we looked up what Thursday Night Football did in ad revenue for NFL, and that package brought in about 565 million. So, if you add a full season package of an NFL, perhaps international, perhaps the Oscars, you could add some substantial money to that ad revenue pretty quickly.
Yeah, they did definitely talk about live events, including international. I think that has to be an element. They have obviously agreements and relationships in place with wrestling
Yep.
entertainment. I don't
Which
again whether you call that sports or
right,
entertainment.
right, which has
So
done
it's played
really well for
live.
it's done really well for them.
You could see international rights for something like that.
Right.
Certainly, other events. We could maybe
Perhaps
see
UFC.
yeah, Eurostar,
Yeah.
Eurocop, whatever that
Right,
is on
right.
Netflix, right? Entertainment and the stories behind those teams, I could definitely see. So they did mention international. They also mentioned international clearly in talking about production, the investments they're making in markets. They mentioned Mexico specifically. They
Mhm.
mentioned South Korea specifically, the UK.
UK, yep.
Yep, all of those places where they're still really investing in nationally produced or locally produced, sorry, content, which we've spoken about for a long time, is putting pressure on more nationally and regionally focused
Right.
media companies in those areas to be able to compete with the kinds of budgets that Netflix and or Amazon and or Disney are coming in with.
Yeah, and I think it's, an interesting point too that when especially depending on how their strategy evolves out, when you look at just the hit and miss, ratio on entertainment versus sports, I just wonder if that factors into their thinking because obviously you had a huge hit with adolescents, but then you had Electric State, which, didn't perform as well as they were hoping for. And I believe the reported budget on that movie was about $320 million.
Yeah.
So one of the most expensive movies all time. So, these are not cheap to make.
That makes their comments on AI even more interesting. Or there was a question directly about AI, comments that James Cameron has made about how AI could potentially reduce the cost of making a film by half,
Yeah.
right? And there was a really interesting anecdote they talked about where I think it was for The Irishman and de-aging. He was
Right.
talking about how AI is helping in the process and the production, not ideation and not doing full films, but
Right.
when you think about again the risk, like you said, of entertainment content and big budget films, the fact that he was talking about in 5 years' time, the difference between what de-aging technology was available and how much it
Right.
cost 5 years ago for The Irishman, same director, this movie 5 years later they said the entire budget for that movie was, equal or less than the cost of just the VFX for the
Right.
de-aging 5 years ago. And
Right.
that's because AI has gotten
AI.
so much better. So it potentially allows you to take a lot of swings with some pretty good visual effects and production quality for, maybe the same amount that you'd be spending on traditional tactics and processes and tools.
Yeah, no, I agree. I think especially when you look at the big blockbuster type of films, that will definitely help speed up the process and make it a lot more cost efficient. And then you're always going to have, the shows that are similar to like the adolescents, which are going to be more character and story driven, which are going to be relatively inexpensive to produce versus a big movie. So I think, if you have that a nice mix of that, it definitely helps you hedge on the
Yeah.
entertainment side.
Then you mix them together and you have AI personae podcasts.
Right. Yeah. Probably.
Dear, they're coming for us, Jeff. Just kidding. All right. So what else happened this week? I think that was a pretty good. I think we've dissected Netflix there pretty
Yeah.
well. Anything else you can go watch the earnings call on YouTube if you want. There were a couple of other things happening this week. If you're watching ad tech news at all or advertising press, certainly in the US, there was a lot of commentary around Meta's antitrust trial. They're investigating their acquisitions of Instagram and WhatsApp. And then there was also news on the outcome of Google's ad tech antitrust trial. Mixed result on that one, and that the judge determined that there was, not an issue on the demand side of the ad tech tools, but there was on the supply side. And so now we're quickly into the remedy phase for that one, which, again, reading press and analysis, and we're still getting a little bit caught up, but could involve divesting or spinning out those supply side tools like GAM, Google Ads Manager. And then when you look at that alongside Chrome, which was part of the search trial that happened, and that remedy phase is still ongoing. We don't have the results of that yet. Again, both of these are going to be appealed, so we may not have any actual movement for a very long time, but certainly we're watching all of those developments and gaming out what those various divestments or lack of divestments might mean in terms of our forecast going forward. I will say for Google that, the focus of late has certainly been on their owned and operated properties, on search and on YouTube. Those are by far the largest portions of their business by revenue. The network revenue for Google has been actually in decline for the last several quarters and couple of years. So already sort of shifting away from that as a primary focus. I will say that's a slightly different scenario than for Meta, where we're talking about Instagram, which is a much larger portion of their revenue being currently looked at. And so, again, we're just in the very early stages, first week of that trial. But certainly, anytime something like this happens, as analysts, you are getting a lot of new information, which is always helpful as we form our opinions about media owners, where these are headed, strategies, future revenue. It was interesting that there was evidence presented that Meta blocked advertising from Kakao and WeChat. The question for me then is, why did they allow advertising from TikTok? I guess that was I would love to be in the room where that was being discussed or hashed out, right? Because it seems a very similar sort of uh, threat in quotes. The quote from the email from Mark Zuckerberg was, "Those companies are trying to build social networks and replace us. The revenue is immaterial to us compared to any risk." So I'm waiting for the conversation about TikTok advertising, because we know that was a big portion of how they grew users and revenue in the U.S. was through heavy amounts of advertising.
Yeah. Yeah. I mean, do you think we're going to be, maybe down the road a year and a half, 2 years from now, in a very different world where perhaps Chrome isn't part of Google and Facebook or Meta is just Instagram, and Facebook is a separate entity?
It's so interesting to game this out and think about where you head. Again, there's a long path between now and any sort of breakup of Meta, so I'm not making any sort of you know, claims or prognostications about where that's headed. There's a question of what happens with Llama and all of the AI research and tools if that were to break apart. As Facebook has been slower growing, do you actually bucket Llama with Instagram and try to create that, or do you break off the AI piece and Llama separately? And then where's the cash come from to invest in that? So yeah, lots of open remaining and very interesting
So
questions.
you're saying we might see a similar pattern, what we're seeing in legacy media, where you spin off assets and try to capitalize it, and we'll see how that all plays out.
Yeah, sorry Zuckerberg. The
Right.
word name Spinco is already taken, so
Right.
you can't use that for Facebook.
Yeah.
We'll see. We'll see. We're like I said, a ways away from that, and the
Yeah.
courts
I
are
mean,
their own
I
beast.
would have
So
to imagine in the short term, the next year or so, between the appeal process, nothing will probably change too much.
yeah, anything like this, and it's true for any company involved in lawsuits. It takes management attention, takes management focus, especially think questions around antitrust. We've talked in the past and within this year, next year around whether that slows down growth and investment, right? So it is something to be aware of today, even if the outcomes are going to be somewhere further down the line. All right, on that uplifting note, any recommendations? What are you watching this weekend? It's a long weekend in the UK this weekend for the Easter holiday, bank holiday. You have any plans? We're just on our normal 2-day weekend here in the States.
No, it should be really nice weather out here in New York City, so looking forward to that. It'll be a nice change. And on the TV side, I just gonna be getting caught up on the studio on Apple TV, which has been a little bit of a guilty pleasure. And then, of course, I'll have to dive back into some reality shows on Bravo that are long overdue to catch up on.
Nice. I've got baseball. Still, again, loving being able to watch the Giants on Peacock. I've been watching the comedian Josh Johnson. I don't know if you've heard of him, but he's having a moment. He's even featured in the New York Times recently, on YouTube. Amazingly, you can get a lot of content. So I've been watching him. And yeah, I'm behind on Severance. We didn't watch it in the moment, the cultural moment when everyone was watching Severance. So I'm still catching up
Yeah,
on that one.
things move so fast now. That's like ancient history already.
I know, I know. I only have so much time. All right. Well, we will catch up. There's a lot more to talk about next week, more earnings. We will actually be together in New York City. Maybe we
Yes.
film this live in person. That would
Yeah,
be fun.
in studio.
Yeah. All right. Well, all of that to look forward to then next week. Next week is a podcast from Group M, WPP's media investment company. All opinions are meant for informational and entertainment purposes only and should not be taken as financial advice. If you have questions or comments for the show, please email business.intelligence@groupm.com.